Hi, this is Ken Long from Tortoise Capital, evening of August 11th, 2009, with a quick practical exercise on using stock charts to develop some trading ideas for tomorrow. We'll be taking a look at the 5-day down scan applied to ETF 100. So I'm logged into stock charts, and as you can see here, I've selected my favorites, one of my favorite scans. These are all different defined scans. And I'm going to take a look at the 5-day down pattern for the ETF 100, meaning it's one of the 100 most liquid ETFs on a basis of an average 30-day daily dollar volume, and they've all been down 5 days in a row. So when I run the scan, I find out that there are 5 symbols, and they're very interesting to me. EFA, Germany, Singapore, gold miners, and semiconductors. Each and every one of those is on the world market model, so that's of interest. If I had a whole lot here, I might want to do something like this, where I sort by volume and get some kind of rank order for the most liquid ones. And if you click it once, you get it by least volume to highest volume, and if you click it again, you get it the other way. But with only 5, we can mark those up pretty quickly. Now, what I want to do is come over to each one of these little icons here and right mouse click, and I'm going to click Open in a new tab, and do that for each one of those. And I'm using Chrome, and this also works in Firefox or Internet Explorer. It will open up that chart in the default setting on a separate tab, and you can let that load in the background while I go through a series of other chart patterns to screen for. So I'll typically screen for 3, 4, or 5 until I get upwards of 10 good trading ideas, and meanwhile all the charts are loading in the background. If I come over to EWG, I can see this is a small default chart, so what I'm going to do is come down and select the washout parameters. Even though this is the 5-day down, I like using the washout because that's my bread and butter setup, and I like the way the screen looks, and it makes it easier for me to read each and every time. And I have all the indicators on there that I will normally use. So here's a quick look at EWG, Germany, and you can see the 5-day down, 1, 2, 3, 4, 5. You can see that price is greater than the 50-day moving average, whose slope is positive, and it's better than the 200-day moving average, whose slope is negative. You can see on a Williams percent hour annual basis, it's right in the middle of the annual trading range. Williams percent hour on a short-term basis, it's approaching oversold, not quite there, but even so, that's the 5-day down gives us our tactical advantage. I can then select Snagit, and I find it easier to mark up in Snagit than using the Java-based web tools. And so by selecting this, take that screen snapshot, and it comes over to my Snagit editor. Now I've already marked this up one time, so what I'm going to do is I've taken the snapshots of all the other ones. I'm going to come over here and select my standard formatting indicators. Control C to copy, come back over, paste, Control V, get this out of the way. Now I have all the things that I like to have to build my frame. So I'm going to start with, that looks like the trading range to me, right here. This is the day that I'm interested in it. My mechanical stop, my mechanical entry. I can see by inspection that I have a 2-to-1 if on a simple retest, so that looks good enough to play for me. I'm also interested in 5-day down failures, and so what we'll do is we'll treat this yesterday's candle as the yellow zone, and so I'm willing to go long on price greater than the green line and go short on price lower than the red line. So if it breaks down from 49.75, I might be interested in this as a profit target on a short sell, and this looks reasonable right about here. It's that doji, and it's at 1875, and you can see I at least get 2 to 1 on 1875, maybe not on the 1925, but I'm willing to go short on that one. So that's a quick look at the 5-day down on EWG. Now I've taken screenshots of the other ones. Let's see how fast we can get through these. Here's EFA. Nice and orderly, love it. And stalking. Mechanical stop, mechanical entry, retest of the swing high. There's 2 to 1 I can see already. And again, the yellow zone fits in right about there. If I was going to go short, I could see this right around 49, and 47.5 looks like a target too. That's EFA. SMH is the semiconductors. Also very nice. Tech's been the strongest sector all year in the U.S., so I'm not afraid of going long on SMH. So that's the day I'm interested. Mechanical stop, mechanical entry. You can see the yellow zone idea once more. I don't want to hide yesterday's price. Simple retest, you can see it's close to 2 to 1. That might be a little trickier. If there's a breakdown, this is what I could see pretty easily. That seems like a natural trade frame. Gold miners. There's the frame. The day of interest. Mechanical stop. Mechanical entry. Retest. You can see that's easily 2 to 1. Yellow zone. Price within the yellow zone is market is still in indecision. That looks reasonable to 37. And if we came over here, you can see 35.5. That's a little unrealistic. That looks pretty good. So that's the gold miners, and EWG we've already framed on a previous one. So there's 4 quick looks at 5-day downs that are framed. Every one of those is tradable. We have the ability to go long or short tomorrow with SPY white right in the middle of its 10-day Williams percent R with no directional bias. We now have the ability to go in either direction as soon as the market or these targets break out of that yellow zone. If we're inside the yellow zone and we feel we have tactical momentum, we would play for a test of the boundary of the yellow. But once we see a breakout above or below that yellow zone, we want to be definitely going in the direction of that primary intraday trend. And we've set out the price levels in each case for those decisions. So that's a quick look at the 5-day down. Thanks for your attention.